I want to move on here and talk about something that's attracted my attention last week. I'm going to call it the value debacle. A very famous value investor, Ted Aronson, ran a big fund, a $10 billion value fund, basically decided to close the whole thing up. He just said, value's not working. And I spoke with him, very briefly, and he said, I don't know when it is. So, guys, let's just weigh in on this. Value has underperformed for years. Growth versus value debate has been going on for ages, but for the last decade, it certainly hasn't worked at all. The S&P growth ETF, IVW, is up almost 300% in the last 10 years. Value is up 100%. That's a pretty big outperformance overall. And we're talking about, just 10 years ago. And you can see how notable that outperformance has been. Guys, weigh in on this. The big cycle guys say, this could take decades. Value outperformed in 2000 to 2010, did all right in the 1980s. It didn't do very well in most of the 1990s. I guess the question is, does it value versus growth matter that much anymore? If you're just going to own the S&P 500, it doesn't really. But is there any mean reversion that might actually happen here? Would we see 2020 to 2030 see a value renaissance?
Right. I don't think there's
Andrew, weigh in.
I don't think there's I'll give you a macro kind of idea away from, and then we can obviously talk about what's going on currently. But look, the economy is going to kind of like, hey, investors, you can do this yourself. Hey, there's robo-advisors that give you models, right? So asset managers themselves, and this is a point people don't often think about, are like Mr. Aronson, right? They have to stay in business. They have their own goals. They're trying to grow. They're just can't survive year after year not performing and not even getting to beta, right? So I think a lot of them, unlike Ted, who maybe didn't see it coming, or maybe he did, and that's why he closed it, are going, you know what, I just can't do this value thing. I won't be able to keep raising assets. So there's been kind of like a race to performance, and you just can't leave growth out. So I think that's one big part of it. And then obviously the second big part, what we've been speaking about the entire segment, is younger investors, new money, new goals. I mean, how many younger investors, and I don't mean kids, I mean people in their late 20s and early 30s are interested in investing in Chevron, right, and energy names. They're just not interested in it, and I think they're willing to leave that out, and they're not thinking about balanced performance. They're thinking about what drives their lives and what they believe in, ESG and things like that, and frankly, growth is overweighted in names like that, and value. Overweighted in the tech names, and value is overweighted in those older names that don't drive change.
Yeah, Tom, I'm sort of tempted to think, here's a famous value investor who throws in the towel, and you must think, is this ringing a bell? Is this the bottom and a good time to buy value? Remember, was it Julian Robertson in 2000 who threw in the towel on tech, said he didn't really understand what was going on? Of course, that was the absolute top for the tech market. I don't mean to drag in Julian at all, but you know what I'm getting at, Tom.
Everything always reverts back to the mean, and you just have to be able to wait. But as Andy's saying, during times like this, young investors, also this work from home economy where companies have had to be really, really innovative. Not just that, the average investor, the average person that's working from home, the average person that's running a business had to embrace technology that much more. So all these growth companies have sped up their timelines tremendously, which has made value stocks even that much more unattractive. So at one point in time, we're going to see value pop. The big question is who's going to be the first one, or which street is going to start putting their toe in the water first. Yeah. Frankly, you don't want to be the first one doing that.
Yeah, I would.
And if you think about what is the stock market, if you think about it, I'll give you the last word there, Andrew. What is the stock market? We define it as a discounting mechanism for trying to figure out a future stream of earnings. So it would make sense that companies that could grow their earnings more aggressively would command a higher price. The question is, how much are you willing to pay for that growth? The whole decade's been a search for growth at a reasonable price, and certainly some of these tech stocks don't seem to be growth at a reasonable price. So what this tells me is that growth has been fairly hard to come by, and that people are willing to pay a lot of money, more than growth at a reasonable price for a lot of these companies, to get that kind of growth that's out there. So I think it says more about the scarcity of real growth names than it does about how awful value is. Paul, maybe I give you the last name. You have any quick thoughts on this?
Yeah, sure. And I think Tom did a nice job of kind of summarizing the next generation of investors. And I think they are much more passionate about, they want to invest in things that they're passionate about. So whether it be ESG, whether it be these growth names. But I think if you just think about the market in general, everyone really thought 2019, 10 years before that was really growth oriented. And then you see the tech name this year, 2020, with the pandemic, with this move to more remote working, we've had to embrace technology even 10x what we did in 2019. So everyone's doing Zoom calls. Everyone's connected to the internet much more than they did of last year. So I think right now it's a very topical time for a Peloton, for Zoom, for these names, because we're living it every single day. So I think that has a lot to do with it as well. But I agree with the sentiment of Andrew and Tom. Eventually, value will have its day. You just got to stay solid and wait it out to be able to get there.
Yeah, it wasn't good enough for Ted Aronson. The wait was a little too long. 10 years is a long time to wait for anything.